The global ambitions of the next American president to transform the United States into the world's crypto capital have found an even more dazzling continuation. Donald Trump has set the goal of ushering in a new golden age of the economy. At least this is how Scott Bessent, Donald Trump's pick for Treasury Secretary, foresees America's future. Perhaps the color of gold inspired Bessent to draw an imaginative parallel defining Donald Trump as an orange swan, an analogy to the so-called black swan events, unpredictable market disruptions. Clearly, the former hedge fund manager is not averse to poetic entrepreneurs. Judging by the signals, the administration of the Orange Swan has no plans to significantly weaken the US dollar. In fact, the incoming Treasury Secretary has vowed to maintain the dollar's status as the world's reserve currency. As a result, the first public statement from the incoming Treasury Secretary effectively halted the growth of the dollar's counterparts within its six-currency basket. On a Thursday, the dollar index consolidated at a relatively high level, trading within the range of 108.90 to 109.20. However, the US dollar was forced to slow down, influenced by speeches from influential Fed Reserve policymakers. Chicago Fed Reserve President Austin Colsby stated that the inflation trend continues to improve. John Williams, his counterpart from the New York Fed Reserve, also discovered a disinflationary trend in the US economy. Meanwhile, Thomas Barkin from Richmond suggested that the latest CPI data confirms progress toward the 2% inflation target. The moderately dovish comments from Fed Reserve policymakers inspired Eurobulls to mount an attack. However, even if the Fed goes ahead with the more rate cuts, it's likely to do so at a slower pace than other central banks. In contrast, the meeting of the European Central Bank in January could result in another rate cut of 0.25%. At least this is the prevailing view among most analysts surveyed by Reuters today. No wonder, given such expectations, the euro failed to break above the critical level of 1.03 for the bills. At the same time, risk appetite remains high in global markets. So, some traders are opting to exit long positions on the US dollar amid rumors of a phased introduction of import tariffs. And this raises the scenario that the strong dollar could push the euro back into the support area of 1.0225 and 1.0250. In the long term, the euro has firmly entered a selling phase between the support level at 1.0220 and the resistance level at 1.0400. However, the end of the rally does not mean that the euro will give up trying to challenge the dollar. Both currencies have their vulnerabilities, so the euro-dollar pair is expected to consolidate. A break and close below 1.0275 would serve as a technical signal for exiting the bullish correction channel. Oil is extending its uptrend today. Brent crude opened today in the range of $80.30 to $81.10 per barrel after a 2.6% jump yesterday. The uptrend in the oil market has been driven by cold weather boosting demand and growing concerns over global supply. Such fears were further amplified by yesterday's reports of the U.S. commercial reserves, which recorded the longest decline since 2021. Additionally, the oil market was shaken by the U.S. sanctions announced last week against the Russian energy sector. The International Energy Agency has warned that these sanctions could significantly disrupt supply chains and Russian oil exports. Overall, Brent crude has surged by 10% since the start of the year. Besides, the incoming administration of Donald Trump may tighten sanctions against Iran and introduce trade tariffs, potentially disrupting oil flows even more. And at the same time, oil prices above $80 per barrel are good news for the Russian currency. Analysts believe that the wave of ruble depreciation is coming to an end. In any case, after testing 1 month's lows, the US dollar has fallen further. Experts also note there are no significant factors for a broad devaluation of the Russian currency. On the contrary, there is a possibility of its slight further strengthening. It's also possible that the ruble found support following the inflation report for December. The report showed a sharp surge in the annual CPI to 9.5%, aligned with the Bank of Russia's warning that inflation would soar this year due to the sapped ruble. So that's all for today. We continue to follow developments in the financial markets. Subscribe to our channel and follow news with us. See you soon.